Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. So as we have interesting fundamental context and the same degree of the technical situation is not very interesting. So actually market stands in a tight range for a long time. That makes no impact on the higher time frames. So in the weekly and monthly you will not find something really interesting. And as we said on Thursday, in current circumstances it would be better to follow the analysis of dollar index, because dollar index looks more evident, it provides clear patterns, targets, and actually bring important background context for performance. So as we discussed on monthly chart, dollar index should reach 113 level. It indirectly suggests that your currency should keep dropping, and based on the current fundamental analysis that we have prepared as usual today, based on the technical picture, we do not see any reasons to cancel our 90 even area below the parity. So everything mostly stands the same. The only questions in the short term, there's no doubts that next week it will be, well, under the impact of the Fed decision, which should start on the 21st of September. And in the current moment, euro actually has a couple of sessions until this moment, when investors will be relatively quiet, without taking any significant positions, just waiting for the result. Based on the technical picture, we have solid sell-off out from the confidence resistance, with this recent drop on the CPI numbers, and relatively slow action within the recent 3 sessions, which makes us think that the current action is just a retracement of this drop. Despite that, we see bullish trend on the daily chart, and even if we'll take a look on the weekly chart, we have bullish trend on the MACD. But with the current environment, and especially with the things that dollar index tells us, personally, well, I do not want to buy euro currently. And prefer to consider maybe a bit higher pullback on intraday sessions on Monday, Tuesday before the Fed meeting, to consider taking the short position at the better price rather than trying to buy your currency in the current situation. Despite that, maybe you could recognize here some kind of the hand and shoulder shape or something of that sort that could suggest technically some kind of the A, B, C bottom, D pattern. Especially you could appeal to bullish trend, and that we should treat this as a pullback of this upward action, which suggests upward action. Maybe this could happen. But this will happen only on the background of some fundamental events which we can't see currently. Based on the information that we have currently, with the technical background that we have, there's no reasons to suggest that this action should happen. So in that circumstances, personally, on the daily chart, I do not want to buy euro currently. Despite that, on Fridays, you can see we should treat action more like bullish rather than bearish, because take a look, market creating the new lows, return it back up and close very close to the top, almost forming the bullish reversal bar compared to this one, just slightly below these lows and below this top has been closed. It just means that maybe it could show an intraday chart to be deep retracement. And indeed, if you take a look at the follow time frame chart, market has formed morning star pattern, so looks really nice, which suggests that it's a shape, some kind of the A, B, C, D shape to the upside, because it works like engulfing. Usually target of the morning star equals to the length of the bar and takes the shape of the A, B, C, D pattern on the lower time frame. That makes me think that, well, maybe we could get a bit deeper action to some resistance of this downside swing. That's actually what our bears should watch for. Since we have bullish pattern, it's logical to suggest a bit deep retracement, trying to get better entry price on the short side. Whether to take long position in current circumstances, guys, this is up to you. So if you prefer to trade on intraday charts, you are dealing with such a patterns on the candlestick patterns, morning stars, or theoretically you could consider this setup as well. On hourly chart, using the extension and the resistance levels, we could see that, well, 190 area looks first level that will consider for taking the short position, because right there it will be target of this ABCD action, and it's also 618 resistance here. So it's interesting to consider what will happen. Additionally, we probably could treat it as a kind of the Gartley's triple to sell pattern right to this level. So these things what we intend to keep an eye on the next week, and then we will see how market will behave and what actually happens on the announcement of the Fed decision.